Hey everyone, so this is going to be a little bit of a rant type video, speaking about kind of my feelings towards the market, how things have played out over the past few months, and then just sharing some of the news that's taken place too. It's been a very, very challenging time for pretty much everybody. Uh, I know most PIs are struggling a lot right now. Copiers are disgruntled to say the least. I've received many messages across the past few days of people just visibly upset and not really sure what they should do. And as a result, it leads to a lot of people sort of lashing out towards the PIs that they are copying. So I wanted to put things into a little bit more perspective and be able to sort of share my thoughts, what's been happening, and so forth. So I guess let's just jump into it. So I, like probably most of you, have not felt very good about the market over the past few months. It's tough waking up every single morning and sort of seeing a sea of red, and it just doesn't end. And it feels like every single time we have a small windfall and a little bit of positivity, then either if it's the next day or a week later, it just gets shut down completely. And the biggest thing I've noticed is it is just a overwhelmingly negative sentiment from a macroeconomic standpoint. Now, I know most people who are watching this video probably don't have a finance or economic background, so sorry if some of like the words I use are sort of jargon in a way towards those particular sectors. But yeah, overall, the fundamentals of most companies and most crypto projects have not changed. It has been the same as it was 6 to 8 months ago, and the negativity has significantly come from the global events that have taken place. Now, unfortunately, that leads to the conclusion that right now fundamentals don't matter. And as somebody who exclusively looks at fundamentals, this kind of sucks because a lot of these companies and projects are being sort of unfairly valued as a result. Now, that does create some opportunities. However, it also sort of creates a situation where you have companies who are having their quarterly earnings and they're absolutely destroying estimates from all the various analysts across the world. They're knocking their earnings out of the park, and then the next day they're dropping between 5 and 10%. So this is kind of the reality we're living in right now. It sucks, it really does, but this is also where it helps to be a long-term investor. The course of say 6 to 12 months is not a long period of time across the period that most people should be looking to invest. Now, obviously, nothing I'm saying is investment advice. This is me just expressing my opinions, how I feel about the market and so forth. I was around in 2017, 2018, during the massive crypto crash, where we essentially saw huge slices in the price of both Bitcoin, Ethereum, and some of the other altcoins. I mean, some of those altcoins have not recovered since that actually occurred. I mean, if you look at the likes of Dash, Litecoin, Ethereum Classic, EOS, these types of projects, they're essentially dead right now as a result. And it's because they weren't able to sort of stand the test of time. And this is kind of what we see in both the crypto and the stock sectors, is it's not necessarily every project you invest into that will survive. Some of them will fail, and that's okay. We're not trying to get a 100% hit rate. We're not trying to only pick winners the entire time. It's about doing enough research, understanding what you're invested in, so that, say, 5 to 10 years from now, you've picked the majority of winners. And you don't even need to pick the majority of winners to be successful in this industry either. It's kind of like the approach that a lot of venture capital funds take, is they know a lot of the companies they're investing into will fail. And sometimes that's okay. And majority of the time, that's okay. It's why these companies and private equity funds are so successful, because you only need a few winners to more than compensate for your losers. Now, obviously on a platform like eToro, that's a little bit different. You can't really have that approach on the platform where you're sort of trying to pick, say, 20 to 30% winners we're trying to pick, as is, I think I can speak for most PIs when I say we're trying to pick majority of winners that we possibly can. But when you sort of faced with the current economic conditions, it's tough, especially if you're a long-term investor. I've seen so many different PIs sort of stray from what they set out, and they say, I'm a low-risk investor, I'm not going to use leverage. And then all of a sudden you have events like this and they start chasing losses, and that leads to exponential losses. And then all of a sudden, like, a portfolio that shouldn't really be high risk is losing, say, 40 to 50% of the total equity. Like, that shouldn't be happening. And I'm not going to do that. I've expressed from day one, through my bio, through my pin posts, through consistent communication in the comments, and I try and express it in streams as well, that I am not a short-term trader. I don't feel comfortable short-term trading. It is, if you feel stressed out by what's going on in the market, imagine dealing with that every single day. That is kind of what you're faced with if you're a short-term trader. So that's not the approach I take. I've been in the investment world for a long time now. It's like 5 to 7 years that I've been studying and practicing within this industry. And the biggest thing I've seen, and the biggest takeaway that I've seen, is chasing losses or sort of trying to day trade more often than not, does not yield any greater return than a long-term buy and hold strategy through fundamentals. Now, that means going through some of these volatile times like this. Because if you're day trading, you're going to go through volatile times far more frequently than, say, a buy and hold strategy. But you could have, say, shorter periods in between that volatility as a short-term trader. Whereas a long-term investor is now faced with a predicament like we're experiencing in 2022 of extended drops. So you're going to hurt for much longer, but you'll also sort of have wins more often than not for much longer periods of time. And this is one thing I've noticed is when everything was going great towards the middle and end of last year, I had people leaving positive comments saying like, Relic, you're doing such a good job. I'm up, say, 5% in the space of a week. And my response was always like, thanks, I appreciate that you're sort of making that comment. However, don't expect instant gratification. This is not the norm. Yes, you might get instant gratification sometimes, but you also might get like sort of kicked in the teeth, which is kind of what's happening to all of us right now. And I'm being put in a situation where I'm having to add additional funds, and that's something I really don't enjoy doing. I don't want to add funds because it's sort of, I feel like I would rather that decision lies with a copier to add funds and then just copy open trades, rather than me sort of saying, listen guys, I'm kind of forced to add funds because of X, Y, and Z. And now you kind of have to too. So previously, I always tried to keep the same overall exposure when adding funds, but due to the current market conditions, I can't do that. I can't keep the exact same exposure when I'm not certain as to which direction the market's going to take. So I'm kind of put in a situation right now where every now and again I might need to add funds, and it's likely that those funds will sit there for a while. It's kind of like the last additional funds event that took place. I explicitly expressed to everybody that I'm not going to be allocating those funds until I feel that we've had a turn in the market. And I meant that. So I'm glad that I did take that approach, because if those funds had been allocated with what happened last week, we would have probably dipped even further. So I'm also going to sort of touch on what has been going on that macroeconomic scale and what is causing these drops. So as I'm sure everybody is aware of and probably sick and tired of hearing of, is the Ukraine and Russia situation. It is a complete tragedy what is happening there, and it is impacting the markets. From gas prices, wheat prices, nearly every single industry is being affected as a result of the main exports coming out of both Russia as well as Ukraine. Now, that's causing even further escalated inflation levels, and the Fed already did not have inflation under control. When you print that much money, it's obvious that shit is going to hit the fan at some stage. And unfortunately, we're at that stage where it has. And now they're trying desperately to get a hold of things. So during the last Fed meeting, it was announced that they would be doing a 50 basis point hike, which was in line with what everybody expected. And as a result, we saw the markets rally, which was a good thing because people were scared that they were going to do additional measures to sort of try and get hold of inflation even faster. And luckily, they didn't announce the selling of mortgage-backed securities. If they did, we would have had a further crash. That was sort of the tipping point for the market. So when it was just announced that, okay, we're going to continue to do the balance sheet roll-offs and we're doing a 50 basis point hike, the market was happy. Now, a day later, after that rally, we saw that they're considering, or there's sort of a consensus in the market that there might be a 75 basis point hike during the June Fed meeting. If that were to happen, that would not be good at all. I would be shocked if they go through with such drastic measures. That would be doubling the current interest rate, which is insane. I don't understand how you could go from 25 basis points to 50 basis points to 75. That would just be madness. And that's not in increments of 25. That is doubling it up. So we would be sitting at 1.5% if they were to implement this in the next meeting. So I'm really hoping that is not the case, because it feels like the Fed is sort of shifting blame and not willing to take responsibility for the excessive, and it can only be described as that, the excessive money printing that we saw pretty much since the start of COVID. Now, let's hope that is not the case and that they don't have such a significant increase. But the market has currently somewhat priced that in at the moment. It's why we've seen such drastic sell-offs. It's why we're seeing crypto and Bitcoin drop to insane levels. I mean, as I'm recording this, it is sitting at just about $33,300 for Bitcoin, which is only about $500 away from its previous low for the year. If it were to break through, we're likely to see a drop to as low as 28,000 before hopefully a bounce. Now, I'm hoping it doesn't break past the previous lows of earlier this year, but nobody has a crystal ball right now. I can't say it's definitely not going to drop, because the market is not being fueled by fundamentals right now. It is being fueled by global market conditions, and none of us have power over that. It is often so frustrating seeing the comments on eToro and sort of feeling powerless, where people are like, well, why didn't you short the market? It's like, well, I don't do that. I'm not looking to short the market. I'm not a short-term trader. I'm a long-term investor. And that's the point. That's always what I've advertised myself as. So it's really, really tough. And it's easy to look back and say, well, it was obvious. This is what happened. Well, yeah, you've got the information that it did happen. So it looks obvious that it would have happened, but it also might not have happened. The Fed could have come out and said, oh, well, we're actually just going to do a 25 basis point hike. If that happened, we would have seen a monstrous rally from the markets. But unfortunately, that's not the case. So I don't want this whole video to sort of be doom and gloom, but I want it to be putting things into perspective. It's important to look at your PIs, look at your own investments in relation to the current market. I shouldn't be compared to the S&P 500, and it's why I've never compared myself to the S&P 500, because I've always significantly outperformed the S&P 500. But my portfolio is more crypto and stocks and tech stocks, which is why my benchmark that I use is the top 25 cryptos as 50% of the benchmark, and the and NASDAQ as 50% of the benchmark. I feel that is the most fair benchmark that I can use to represent my stats. And the last time I did that analysis, which was probably about half a month ago, we saw that over a 12-month period, I was outperforming the benchmark just a little bit, nothing too crazy. But on a year to date, I was underperforming the benchmark by a few percent. And that's kind of what I expect to play out. Have mistakes been made throughout the time? Sure, we all make mistakes. I would say some of the biggest things that have impacted our portfolio over the past few weeks is the absolute fiasco that happened with Crypto.com's Crow, and them essentially saying we're slashing rewards significantly. That caused a massive drop in the project, and I lost a lot of faith in Crow's and Crypto.com's management to actually be able to make the right decisions, which is why I sold off that position. We also saw the drama that happened with Phantom and that flash loan that was essentially able to manipulate one of the protocols on the network. That caused a massive drop in Phantom. It's sitting at massive lows right now, which is so unfortunate because it's such a great project that has so much potential. Now, they need to sort of claw back and try and fix that. I've been such a long-term believer in many of these projects, and that, unfortunately, the timing's just so bad where they're making mistakes when they cannot afford to make mistakes. And we've seen the same from Luna. Terra Luna has dropped a huge amount because of them essentially losing the peg against the dollar through UST. And now we've seen sort of Luna take a hit as a result. So it's kind of one of those things where you get hit when you're down, and making the decision of whether to hold on to a specific project or cut it loose completely. And I've decided for some to cut loose and some to hold on because I think they'll turn it around. And that's sometimes a difficult decision to make. So it does happen, and it's tough. It's not easy for anybody to sort of go through a 35% drop in year to date. And I think we're sitting at probably about a 45% 12-month drawdown. That's tough. That's harsh. But unfortunately, crypto right now is not trading like it should be. It's trading as if it were a tech stock. So anything that happens in the US is impacting that. And the decision I've decided to take in order to sort of decrease that volatility is increase cash. I know I'm going to be forced to sort of add to the cash position anyway. So it's like, well, I'm just not going to allocate those funds until there's been a significant change in the market. That's the strategy I've decided to employ to ensure that volatility is somewhat decreased. I could have taken the cash that we have and opened a hedge position, but we would need to add funds anyway. So I decided that maybe instead of allocating those funds as a hedge to sort of bring that in, instead just increase cash so that when there's signs of a turnaround, I can deploy that cash. That is the current plan. That is what I'm going to be doing. So we're probably going to sit with, I would estimate, between 15 and 20% cash, potentially even higher over the next few weeks, unless there's something that changes significantly over the next few days. That's currently the plan. That's what I'll be looking to execute on. And yeah, I know it sucks, guys. It really, really does. It's not easy to go through drops like this. However, these types of drops, if we can survive 2022, if you can survive 2022 as an investor, what's going to take you down? You're experiencing some of the most negative volatile conditions that you can. So it's tough. It's difficult to sort of say buy and hold and just wait, but that's what needs to happen. And there are some great buying opportunities right now. Companies are trading at insanely low valuations. Robert Merck had a great video sort of delving deeper into that. I'll put the link to that in the description. I highly encourage you to watch that video, sort of touching on some companies that are just insanely valued right now, and the fact that nothing can really turn that around as long as the macroeconomic conditions don't change. And when they do, the market will react. People will realize that these companies are way too discounted. And then we're likely to see significant bounce in many of them. So I'm probably not going to look to allocate to crypto right now with those allocated funds as well, at least not until it stops trading like a tech stock. And I might look to sort of diversify those funds into some overly discounted companies over the next few months as well, when we do start to see that turnaround. So yeah, guys, I know it sucks. I know it's tough. And I will continue to answer questions that you do have. I have seen an increase in extremely negative and hateful comments on eToro, both on my feeds as well as other PI's feeds. If I see any of those, listen, I'm not going to respond. I'm just going to flag it as spam and move on. If you have genuine questions, if you want to actually engage and know, if you're upset, like, it's fine to be upset. There's a massive difference between being upset and hateful. So I'm not going to sort of deal with the hateful comments. I will respond, as always, to the upset comments or the frustrated comments that there might be. If you sort of want additional answers that I maybe haven't answered in this video, then feel free to reach out. I'm happy to answer that for you guys too. So yeah, I just want to see if there's anything else that I did want to mention. I'm sort of just doing a one-cut video. I know it's a long one, so if you did watch to the end, thank you so much. As always, I appreciate your guys' support and understanding during these difficult times, and I'll continue to do my best for the overall portfolio and for each of my copiers too. So if you did stick through to the end of this 21-minute video, you're a legend. I love you, and feel free to like the video, feel free to dislike the video, whatever you want. And if you did enjoy and want more content, then make sure to subscribe, and I'll catch you in the next update. Thanks everyone, and peace.